which indicators we can use for the boom and crash, and how we can use those indicators.
Sir, can I ask you something?
Yes, brother.
Can you make the video high resolution, because when I see it again, it will be clearly.
Video, this video, it's not high resolution recorded video.
It can be.
I think it is a high resolution video. Okay,
Yes, sir, it is a high.
I will check it.
Okay, sir.
Okay, so now we are going to start the indicators. Did you use any indicator before on the boom and crash while you are analyzing the market? Anyone who used indicator?
Yes, sir.
Which indicator you use?
I mostly use moving averages.
Okay.
So if it is downtrend for the crash market,
Right.
so it's better we can go with it. For
Okay.
boom, it is above EMA, we can go with it.
Right. Okay.
And
So-
RSI as well.
Okay, RSI. Okay, good. Yesterday we learned about the patterns, chart patterns. Okay. The chart patterns, some of the chart patterns we can see in the oscillators also. The RSI is a one kind of oscillator. Every time frame required a different period to use the RSI. I start from the 1 minute. So when I will increase the time frame of the candle, then I will decrease the RSI period. But when you will use on the 1 minute, you use the 20 period. And the oversold and overbought levels, you can set the 90 and the 10 when you are using the 1 minute only for the boom 1000 and crash 1000 pair. But when you will use the boom 500 and crash 500, this level 90 and 10 decrease to the 80 and 20, right? But in the 1000, you can use the 90 and 10 level. Now here, this is a pattern, right? Which is look like a M, but what the M pattern we require? This one, right? The same pattern, look here. RSI, it show you which pattern? The M which you require, right? And after that, you can see when the M is confirmed, price is moving down, right? Which is this pattern?
W.
W. RSI is showing you the W, right?
Yes.
Same thing, it's showing you. Which is this pattern here? A different kind of pattern, right? But the RSI what shows you is the M.
Yes.
Then you can trade this M pattern. After this pattern, market will move down.
So,
And this price where it reach at the overbought area, and now this is a reversal pattern, chart pattern in the oscillator, market can move down from here, right? Which is this pattern?
W.
W. Also, RSI show you this is the W, right?
Yes.
Yes.
And after that, what we are looking, market is moving up. Why I changed this on the line chart? Because I'm going to give you the comparison of this pattern and this pattern. You can use the candles also, but when you will use the candles, it will look like a different, so you can confuse. But first you understand what I'm teaching you, and then you can use the candlestick also. Here, this is look like a M, a triple bottom, a triple top, right? But at the down, RSI is showing you any pattern?
Yeah.
RSI just overbought, but it is not showing you any pattern, right?
Yeah.
So the movement of this market, can you see a very little movement, then market move up again. Now this M and W pattern you can find here and you can match with the RSI, and also you can trade with the confirmation, because M and W pattern is a reversal pattern. After that pattern, price can continue. See here, again it's a W. RSI shows you W, right? And the price is moving up. So for example, you enter here with any confirmation, and then your entry, for example, is here, and you are thinking that the market can move down. But after this confirmation, if the price is breaking this area, then what you will do? You will wait, or you will close the entry. And the chart pattern, what we learn? Can anyone tell me? Yes, brother.
That we secure the profit at this level.
We will secure the profit and we will close our entry. Communicate with me, right? See here. Which is the price? This one. The last candle, this is a spike. This is the open price of the spike, right?
Yeah.
If your trend is not continue, then which will be your stop loss? The last spike open price will be your
Stop.
stop loss if you are trading on the 1 minute, right? So here, anywhere, if you find a W here, right? And if the price wants to move down, then it must move down before the last open price of the candle. Otherwise, it is a risky. Otherwise, it is a risky. So here also it is a W. So it means that price momentum is decreased and now price can move up from here. When the price is moving in the crash or in the boom, you can see that some spike, maximum time, you will find that 3 spikes will move down, and then too much price will move up for the pullback, and then again you will see the 3 spike move down, again price will move up, 3 spike move down. In this way, market is running. In the current market, you just to see what is going on. How many spikes are there? 3 to 4, right? Then
Yes,
2
sir.
price moved up, and then how much price spikes are there? 3 to 4, right? And then too much price move up, and again these one big spike, it's compared to 3 spike, right? And then again price range or pullback, and then it's moving down, again it's moving up. So what you understood from this structure, when you are trading the 1 minute, after 3 spike, what you will do? You will wait or you will leave the market?
We will wait for pullback.
If your trade is running, close the trade and then wait for the pullback. When you find a spike is appearing in the market, then definitely 2 more spike you will get. The 2 more spike you will get. Here, same situation. 1 spike appear, you can enter. You will get even 1 spike or 2 spike you can get, but it is secure. Here, the price is moving up. This spike as compared to this spike, even it's a very similar spike. So here it is not a confirmation because this trend is already moved. On the 1 minute, not I'm talking on the 5 minute or H1, but on the 1 minute, it is exhausted. Now the price will give you the little bit pullback, and then after it can move down if the price fallen furthermore. Okay. So one thing is clear, the M pattern, W pattern, and the candles, and M pattern and W pattern in the RSI. This point is clear?
Yes, sir.
Okay. Why I teach you this point first? Because when I will introduce the spike catcher, these points you need while using the spike catcher. Otherwise, spike catcher will give you not good results. These points are very important with the RSI and with this M&W pattern. Okay. Now the another thing, I'm talking on the divergence now. A divergence is one kind of movement where this price is making low. This price is making low from the previous spike, but RSI is not moving and not creating the low. Is there any difference, right? This difference you are looking? Hello?
Yes, there is.
Yes, sir.
Yes, sir.
The price makes a new low, right? And RSI,
New high.
higher low, right?
Yes, sir.
So if we draw the lines, do you see this difference?
Yes, sir.
Price
It shows
direction,
divergence.
it is a divergence. So this is a one kind of signal, then possible price cannot move further more, but it is not necessary every time. But this is a one type of signal. If you have an entry, exit, don't take a risk. Don't take a risk. This is very important. Okay. See here, the direction of the price at the downward side. The direction of the price at the downward side. Is it confirmed that this movement is the right movement?
Yes, sir.
So if
So
this is
validation.
if this is a confirmation at the both sides, then you can continue further. The trend will move down. Yes. Now ask the question.
It's a validation. I was just.
Yes, it is a validation, right? Validation with the oscillator. Here, the price, it creates a new high. RSI creates a
No.
Higher low.
lower high, or higher, lower high, right? So this is the one kind of divergence that the price will further move down. Now understand this divergence and understand this divergence. This is the opposite for the downtrend, and this is in the favor of the downtrend. This is in the favor of the downtrend, and this is opposite for the downtrend. When you find this one, exit the trade, and when you found this one, it is a one kind of sign that price will fall furthermore in the down direction. If you are using you are on the crash pair. Okay. So you got a signal from the spike catcher here, from spike catcher here, spike catcher here, and also you got a spike catcher signal here, and you got a spike catcher signal here. The last signal, can you take, because divergence is confirmed?
No.
We will ignore it. We will ignore this one. Here, it is a very similar. Where it is? The price moved down, down, down. Okay. You just to think here. Price is moving down. And here, is there any low? No. So this is one kind of signal that momentum is loose. Now price wants to move in up direction. Where you find, if price is giving you low and RSI is not giving you low, if it is giving you, you can enter this trade if you get the trade here. But if you think that here you can see it is a low, similar direction, and you enter here, you get this spike. Now from this low to this low, RSI is what showing you. It's moving up and the price is moving down. Even the price is moved here, but we will never trade in this area. There are chances it can anytime price will move up from here. And you can see this is too much movement at the upper side. This is too much movement at the upper side. Finally, price moved up from here. So we will not take any risk, because if our trade is running in the loss, it will feel so bad and our emotion can be disturbed. So we cannot use when you found a divergence on this candles here. Okay, here we are going to change the another pair and see the same thing, boom 1000. Okay. Which is this? It's a one kind of W, and here RSI show you the correct W. From here, you can trade. You can trade, start. The price will move up and further it will move up. At the last, where the price is not moving up here, I'm showing the candle. If you are using the 1 minute and you are not getting the spike and the price is broken, the last open price, what you will do?
Secure the profit.
Secure the profit. Why? Because from this movement in a 1 minute chart, you will find like this movement. And now the price is, it can move down, it can make a pullback, and then it's move up. When you find it's breaking, and then you can enter again, but don't enter in this area. There are so many chances price can move down. Okay. So when you are trading on the 1 minute, keep in mind, if the open price is broken, then the spike chances remains 50%. So if you are thinking, I'm waiting, I will get the spike, I will get the spike. Maybe you place a trade here, right? And this price is broken. Even you got this spike, it is not meeting your entry point. Even you are in a loss. So it is better we are not taking too much losses. From here, we can take the loss. What amount is there? On the 0.2, it not will exceed $2.5. So small losses, when you will bear, you will get the good profits, then it will increase your account. But if you are targeting the too much losses and very small profits, day by day, your account will decrease. On the 1 minute, our exit point will be, if the previous spike will broke, we will exit for the security. If you have a 0.5 lot, and then if you don't want to close all the trade, then you can modify your trade. 0.3 you need to close, and 0.2 you can hold, because this loss you will save. When you find there is a possibility now market can move up, then again you can add the 0.3 to recover the losses at the last entry. But mostly in the running market, you will get the profits always. Okay. So RSI divergence on the higher time frame, how you can find? If you are using the H1 chart and then decrease the time period of the RSI, move to the 14, and level must be what? It must be
20 and 80.
30 and 70. Okay. These levels you need. Okay. And then find the movement on the chart. See, this is what? this is a movement and this is the movement here, right? This movement is showing the downward sign, okay? And what the RSI movement is showing you, it is a flat. So if there is a reversal, it is possible it will move down. Again, see this movement and this movement. If it is right, then okay. But if it is against you, then you can think about the divergence reversal. Here, we are in a boom. Definitely, we will take opportunity for the buy always. See this point and this point, what's showing you. It is a correct movement. We can enter in this movement. We can take an advantage. This movement is showing you that this low and this low, as per the price, oscillator is showing us the same thing. Oscillator is showing us the same thing. Now, where is the divergence? This is a correct point. It is a confirmation. There is no divergence for the reversal. But here there is a divergence point. What is the difference here? The price what showed you? Yes, Harish.
Making new low.
So new low.
And at the RSI, it is not showing you the, as like a price, it's showing you the too much new low, but RSI is not showing you, right? Here you find a reversal, it is a correct reversal because RSI is not showing that it is falling down too much. Some pictures I'm going to show you, it will clear your idea more. See here. This high and this low. RSI what show you? Opposite? Is it opposite, right?
Yes.
This is your reversal. The price will move further down.
Down.
Okay. This is another, I think. It's a 500. Okay. See here, it's a B1000. This high and this low. Here it is a high. Here it is a lower high. Here it is a high. Here it is a higher high. There is a difference. So this is the reversal point that price will move further down. So these points, if you are analyzing on the H1, you can use, but mostly we are using on the 1 minute because mostly we are a scalper, we are not a swing traders. Here you cannot wait so many hours for this position, but when you are trading on the 1 minute or 5 minutes, these divergence will work for you more. It will give you the idea, am I enter or not, right? These price movements say showing you same thing. Look at the price is not making the high, new high, but the RSI is making new high. So you can see it is a signal and price is moving down. And the divergence from we will take from the stochastic also, but stochastic we cannot use for the M and W pattern. And for M and W pattern only we can use the RSI. Stochastic we can use for the divergence. Also, it will show you clear things about the divergence. On the H1, only on the H1, you can use the default setting of the oscillator stochastic. 13-3-3 simple. The same thing, what you need to do, you find this movement, you find this movement, you find this movement and this movement. Here, on the same on the boom 1000, what the RSI show you here is the same thing the stochastic shown you, right? Here stochastic show you very clear. So this point is a sign that price can reverse further down here. So we cannot expect more uptrend candle, but price will move down. In this kind, you can use the divergence. If there is any question from the divergence, ask, I can clear.
Sir, one question.
Yes, brother.
Sir, so when we say divergence, so should we consider as per RSI signal, it should go down or it should go up?
The divergence from the RSI and divergence from the stochastic, it will show you same thing. If the signal is for the downward, it will go down. If the signal for the upward, it will move up. It will move
So
up.
in this correct. So in this case, RSI shows up and the price shows down. Correct.
Yes.
So
now here RSI
move
show
up or down.
Yes. You can see that this is the continuation of the downtrend. This is the continuation of the. This movement is a continuation of the downtrend. Why? RSI moved too early, but the price not moved too early, right? And when divergence will confirm, when a one candle will close. When the green candle is running, it will not show you. But when after green candle, you will get the one red candle, which will be closed, then you can identify this is a divergence or not.
Correct, sir.
Okay. So you know that the high, if the price is making again and again higher high, definitely we need that RSI is showing the higher high, right?
Right, sir.
But the price is showing you higher high and RSI is showing you lower high. It means RSI wants to move down. If RSI want to move down, RSI is calculating what? Your candlestick time period. It means there is something weakness in the price movement. That's why RSI is showing we will move down. And it is not every time RSI divergence will work for you. But mostly in the cases when the RSI is getting oversold or on the 50% level or on the overbought, that time your divergence will work. But if above the 50, below the 70, then the few chances it can work and possibly it cannot work. But you see that the price is too much moved up and RSI is also in the overbought zone. Now price can reverse back. It is possible. So that can be possible, right?
That's true, sir. That's correct.
Okay. For just confirmation, you are taking the divergence idea, not for the reversal. Not for the reversal purpose that you are taking a strategy that only on the divergence I will trade here. Don't take. Only just confirm that this movement is a correct or this movement is not a correct. Okay. And by far only on the 1 minute, what you do, where you need to exit, you take an idea from the RSI divergence and period you will use the 20. RSI will give you the exit point. That now you can exit, the trend is exhausted. The trend cannot further move in up direction. But you can see on the 1 minute, the stochastic will not give you this one, right? So 1 minute stochastic we are not using. Only we are using the RSI for the divergence purpose and for the M and W pattern purpose and for the movement that price is oversold or price is overbought. Now I'm going to show you one thing more, which is a tip on the RSI. If you find this condition and then you find a W pattern on the boom, the price will move more further in up direction. See, here RSI is oversold, right? If the RSI is near to the oversold, or if RSI is oversold and you got the W pattern, like here, RSI is near to the oversold area and you got a W pattern which is confirmed here and here, then price will move further more. and where you will take a close, it will not reach to the 90, it will reach to the 80. Near to the 80 level, you can take your exit to book the profit. But if you use the trailing stop, then it is possible you can continue the trade. But if your target is very small, then close the entry from here to here, it will move to the 80 level, and then from 80 level price again will move down, maybe from the 50, maybe from the 70, maybe from the 60, then again price will spike. But when it reaches to the 80% of the level, then take the profit and leave the market and wait for the new opportunity.
Sir, I have a question, please.
Yes.
Is W at the pattern of the RSI and the short is the divergence?
Yes. W. Can you repeat again?
This is the
This pattern is
one.
moving down, right? Here, price is
Right.
moving
This
further
is
down.
divergence.
RSI is not moving further down, right?
Right. Is this a divergence?
This is a divergence. This is a here
Divergence.
price. Why it's moved down? Why RSI not moved down? Because this is a divergence. This is a divergence. So this W is confirmed by the divergence, and then you are taking
Okay.
the entries, right?
Right. I got it. Good.
Okay, good. But if you find a W, correct W in a price, and also RSI is showing you the same W, then it's an extension. You can continue, right?
Right.
But sometimes price will give you this type of W, and RSI will confirm you the W with the divergence. Then it is a correct area. Here you can enter, market can move up. But you can see, brother, here, in this condition, we are getting the W here, right? In this
Right.
condition, we are not getting, right?
Right.
This is not a W. This is not a W. You can see the price fails, again move down. Where you find this type of W, it is a reversal. You found here it's a W on the price, but see here this W is not confirmed, right? So this will not work for you. So identify the correct sign of the W and then enter, then definitely you will get the profit. If you go backside and if you find the same thing again and again, you will get so many times. See here. Here, the price and the RSI is validates. Here, this W, it is showing what? Is it showing the divergence?
Right.
Right? After this divergence confirmed, how many spikes you can get? 3 to 4 you can get. Again, here is the W.
Okay.
Is it a confirmed divergence? So if after this spike, if you enter maximum 1, 2, 3, a 3 spike is not breaking the high. So after this spike, you can exit. Maybe there is a small profit, no problem. But we are not waiting for the another movement. When another movement will happen, we will confirm, then we will enter. In this way, your losses will decrease. Here, it is a good movement. After this movement, you can see again and again, you got a spike, and price moved up. But here, see in this area, what the price showing you, what the RSI showing you. RSI is showing any momentum? No. RSI is not making the new high, but the price is making the new high, right?
Right.
So here it is possible that the trend enough, and now we are going to close our entry. We get a profit of $10 to $12, $15 on the very small entry. So now it is enough. Now price will give you the pullback. After pullback, when you get the confirmation, then you can enter with the help of the RSI, right?
Right. We keep our minds that in the down W, we are in overbought.
Yes.
Right? Or?
Yes. Here you are taking the W, right? In the boom pattern. Where is the exit? Is
Even
it M? Is it the one kind of M? It is broken. It is the one kind of M, right?
Right.
So M is your exit and W is your entry for the boom.
Okay.
Only two patterns, remember, you will never fail. You will never fail. But I have an experience. When they took so much profit, at the last entry, they are not closing trades on the, when the M is confirmed, you know that price is moving so down, all this profit turns into loss. So it will not grow your account. You must be habitual to taking a small losses. And accept this one. On the boom and crash market, it is necessary you accept the very few small losses. Otherwise, if you only have a greed in the market, then you will not get success in this market. Every market have a different psychology. So understand these things. Okay, so everyone have clear about these points?
Yes.
Very much, sir.
Yes,
Very
sir.
nice.
Okay, so in this point, when I give you the confirmation of the entry, confirmation of the exit, and now if you get the spike catcher signals in this area, easily you can take.
Yes, sir.
And which spike catcher signals we cannot take, if it is confirmed by the M, then if you got a signal here from the spike catcher and the M is confirmed, it's not giving you the signal of the spike, it is not coming the spike and it is breaking the last open price of this spike, then this signal, last signal, you take a loss. Every time it will happen. Every time it will happen. So you can take this loss and then wait for the new opportunity. Okay, now we are going to the spike catcher, right?
Right, sir.
This is the spike catcher. Spike catcher will give you the arrow that there is possibility price can give you the spike. When the trend is started, in the start, it will not give you. In the start, what you will confirm, is it the M or not? If you confirm this is the M and it is matching with the RSI, now I will use the spike catcher signals and it will give you. Now this signal is a profitable, this is a profitable, this is a profitable, these all signals are the profitable. This signal, you can check with the RSI. RSI is showing you now the momentum is loose, price can make a pullback. Price can make a pullback. So if you find, if you are not closing at this point and little bit above 4 to 5 candles, the W is confirmed, then exit the point, then exit the entry. Here, when you will get this signal, now after this signal, you are not getting any spike. Do you miss one spike, very small spike here? I'm expanding the chart. After this spike, after this signal, do you got a spike here, which is very missed, right? So sometimes it will continue, but sometimes it will not continue. Then this loss you need to take. It will be not more than the 2. It will be not more than the $2, but you need to take the loss and wait for the new opportunity. If you get the opportunity, then you are going to enter. Here again, at the last signals, what the RSI show you and what the price show you here.
Divergence.
So we need to avoid this signal. From here, market will move up. The last signal we will never take, where you find the divergence. If there is no divergence, you can continue, you can trade, it will give you the profit. Here, after this signal, after this signal, after this signal, is it a W confirm here? No. There is no W. Then you don't need to close at the open price. It will give you the spike. But where the divergence is there or the W is confirmed, then don't take the signal. Only these are the simple rules for using the spike catcher. Yes.
I didn't understand that one.
Which point, brother? This one, right?
This one.
In the crash, which is our confirmation for the entry?
L pattern.
M. Which is the exit point?
W.
W.
Here you got any W?
No M.
No?
Not
Yeah.
W.
No W. So we can hold. We can hold this entry. We will get the spike. But if you see here, there is a W or there is a divergence, then this signal don't take. We are not taking the signal on the divergence. Sometimes it works, sometimes it not work. Because now you can see after this divergence, price is moving up. And another concept which in the start I told you, what is this one? Every 3 to 4 spike, what you will get?
Small pullback.
Pullback.
So after this pullback, you found these 3 spike to 4 spike, right? Now again, you will get the pullback. And if the price is starting again, and then you are getting the signals, then you can use. Otherwise, don't use. Otherwise, don't use. If the price is going against the trend, the spike catcher will not give you the signal. The spike catcher will give you only the signal when the price in your favor. The trend is in your favor.
All this addition to the price action and zones and
Yes. So see here, you know already here that the price is in a upward direction. When the spike catcher signal you got, do you got any M here?
Yes.
Where is M? No M. When you got the spike catcher signal, do you got any M here? No. So where we will start taking the signals from the spike catcher? When in the crash, M is confirmed. Then you need to take. Otherwise, this is a pullback. In the pullback, 4 to 5 spikes you will find in the moving average. In the price movement, trend can be changed for a movement, and spike catcher can start the signals because spike catcher will give you signals in the trend. So here you can be trapped because of these arrows. But before the arrow, what is the confirmation you need to take? Yes, brothers. What is the confirmation before the arrows you need to take? Then you can start the trading from the spike catcher.
M and W patterns and the divergence.
Only the M and W and the divergence. If this is confirmed, spike catcher always give you the profit. Spike catcher always give you the profit. Okay, another pair we are changing and we are looking at how it's working. It's a boom 1000. Okay.
you still have to analyze the market at the 5-minute, put the zones and the trend line.
No, no,
Right, or-
no need. No need.
No need.
No need. Don't make it complicated. But 5 minute, 15 minute, 1 hour, why we teach you? One day you will be there. swing trader, right?
Right.
So it is necessary all the time. You will never use this small spikes. One day you will be the swing trader. You need a future analysis for the market data. If the trend is downtrend, you have an idea when it will change into uptrend after 4 hours, after 5 hours, and then you will trade on the 1 minute, even on the 5 minute. So that analysis is important. Before going to the spike catcher trading, you must analyze at the higher time frame what the higher time frame is telling you. If the price in the boom, it is in a downtrend, it means you are trading pullbacks. If the price is in an uptrend, you don't have a fear. Spike catcher will work for you more if the trend is uptrend. But if there is a pullback, and you know that how much pullback candles will appear, 3 to 4. So 3 to 4 small profit take and exit from the market, right? So from here, the spike catcher signal. Yes, brother.
Can we mark this areas like 2 lines on the H1 and then show them the signals, so that will identify the structure?
Okay.
How the signals in between the uptrend works, and how the signals in between the pullback works.
Okay. Okay, I'm showing them. This area is a ranging market, right? In this ranging market, how it is showing the signals, and then we will find on the uptrend also. See, this is a ranging market, right? In the ranging market, how many signals you are getting? 5 to 6, sometimes 7 to 8, sometimes 10 signals, right? Because price is in a ranging in a higher time frame. So this movement, if I draw here and this movement till this movement in the higher time frame, it will show you which one. This is the area. This is the area where in a higher time frame price move here, and spike catcher give you the signals. For the pullback. This is what? It is a pullback. In a pullback, you got these spikes. Now you know at the higher time frame where is the key level from where the price can reverse. H1 candles reach to, if you are on trend line or it reach on your key level, definitely price reverse from here. After that, down movement, again price move, and then you got the signals here, 2 to 3 signals, which you can use here, right?
Right.
So you can involve the higher time frame to identify it's a pullback or it's a swing or it's an impulse wave, and then come to the M1 and M1. What are the techniques? MW, W for entry, M for exit, and divergence. These are the confirmations. These are the confirmations only. Is it difficult?
Sir, can you explain more about higher time frame and look back at one, and you can make it a fresh 1000?
Look at here, brother. See here. For example, you have a key level here, right? You have a
key level.
Any key level from the previous market, that is your key level, right?
Right.
And when price reach to your key level, now you are expecting that price further move in up direction from this key level. How much furthermore it will move up? Definitely you have a resistance level, right?
Right.
You will draw your key level here also. So this will be your another key level. Okay. Now you have an idea. If the price starts from here, it will reach to this area, right?
Right.
So this area is your target in a higher time frame. Definitely when lower time frame move up, higher time frame move up, right? So this area will be your target, and you will get the signals between this area. And when price reach to this area, now you need to exit from the trading and wait for the confirmation. It is a breakout. After there is a retest, and then if the price is moving further more, again you can use the indicator, right? But if the price reach to this area and it's moving down, now in a downtrend, can you take the signals?
No.
No. Again, what we will need? We will wait for the next key level. When price reach to the key level, and on the higher time frame or in the lower time frame, when the spiking starts and it confirms that this key level is working, now we are going to use the indicator. When we will get the signals, we will scalping. This is a way. And now you can take these key levels from the horizontal level, or you can take the key levels from the trend lines. You can take the key levels from the channels. You can take the key levels, what you know about the key levels, how we can identify. So entry and support and resistance point, when you will know the where is the exit point for the trading, right? Now clear, brother?
All clear.
Okay. So the signals on the spike catcher, everyone understood how we can take these signals. You can understand. Now, one thing more I'm going to add. All the past things are clear. Yes, brothers. All the past things are clear. Now I move on.
Yes, yes.
Okay. Now we are going to add some moving averages. What? Moving averages. Because we are looking at it, we are getting the signal here. Price is moving too much down, then it's spiking. Getting signal here, price is moving too much down. So this is not a good entry point. If I enter here, I'm not getting the profit. If I enter here, I'm not getting the too much profit. It is better I can take a lower entry. I know that from here price can give me a spike. So these spike levels will help you by the moving average. Moving average will give you the idea from where the spike is possible. We are going to use number one, 50 linear weighted, or you can use the exponential, simple, smooth, anywhere. Any moving average you can use. A linear weighted we are using, right? Okay. And then the another moving average we are going to use, which will be 100. Color is different. And another moving average we are going to use, 3 moving average we will use, which will be the 200. Okay. See the price structure. This price structure, what show you on the moving average? Where price spike is possible, definitely you will see 2 to 3 spikes. Now you understood that from where signal we are getting here, spike is coming on the moving average, right? 100 it's crossing, we can enter. 100 crossing, we can enter. 100 crossing, we can enter. 100 crossing, signal we got. But price crossing the 100, we enter. So this spike taking from the 100 That is more better, right? Or if you are using the 200, and then you can see sometimes may you miss the spike, like this one is missed. But if you are using the 200 moving average, so here it is a very good. The two signals you got are very nice. This one, after this one, it gives you the profit, right? But one thing keep in mind. Here, what is the pattern?
Yeah.
AM. If AM is coming down and it even crosses the moving average, don't enter the trade. When you will enter? When price move up, is it there any AM? No. Confidently you can enter, right? But if there is an AM, then don't enter. This is a sign of reversal. This is a sign of reversal. After reversal, definitely one retest will be there. Maybe it will out from your losses, it will give you some profits also, but this is risky. Sometimes there is no retracement. Mostly immediate market will move down without any spike. And you also found so many times. If you are following the moving average, which time you will never follow? Tell me, brother.
On the M pattern.
When you get the M pattern, then don't follow the moving average as a signal. Okay? Is it a M? Right? This time it's not work for you, right? And now what is confirmed here? The price furthermore moved down. After this spike, again it's confirmed the trend is moving up. Now you can start the trading, because if you wait this one, it is possible price can further move down, and once it moves down and you not close the trade, maybe it will blow your account. So we are not taking any risk at the moment. Anytime we will not take any risk. Here, what you got? The movement is reached to the 80 level. At the 80 level, what will reach? Exit. If there is a 80 level market reach, then aware. Now it is possible price can reverse back, or it can give you pullback. These points, if you remember, then your trading will be perfect. On the 1 minute with a spike catcher, without the spike catcher also you can trade. But these techniques which I teach you today, it is very important. Is there any question?
Sir, we can trade with these signals.
Yes, you can use this signal. This indicator I will provide to all of you for 1 month free trial, right? So today, all of you provide me your broker ID. I will send you this indicator, and then license key. Load this indicator on your MT5. Use this indicator, and if it's working for you good, you can further use. Otherwise, if your price action analysis is good, then the indicator, then you use the price action analysis.
Sir, I meant these signals, sorry, these arrows.
Yes, you can use. Why you cannot use? Use. Is there any condition?
No,
is there any condition for the reversal? If there is no condition for the reversal, then you can use. But at the last, you found a condition for the reversal.
Got it. Divergence.
Divergence. Now, can you use this signal? No.
No.
Right?
Right.
Now you can use your price action. Where it is possible, it can spike the higher moving average 200, and it can work for you. You can take advantage, right? Maybe it will be a small spike, maybe it will be the big spike. So these moving averages are what? These are your dynamic supported resistance. Manually, you are drawing the key levels, but these moving averages are your dynamic support and resistance. So in the boom and crash or in any type of market, these moving average is showing you the trend, plus it is showing you the dynamic support and resistance. You can use these. Okay. Any other question?
Yes, sir.
Yes, brother.
So the signal arrow, I'm seeing a lot of them there, and they are pointing towards the upper direction. Are they not supposed to point towards the lower direction to tell us that the price is going up? Instead of I'm seeing a lot of them up.
Yes.
Instead of from the moving average, it's supposed to show us, okay, probably now spike want to happen from here, and then it goes up. What is at the top? I don't understand there. Yes.
Then why there are no down arrows, right?
Yes.
If there are down arrows, your chart will be filled with the arrows.
Okay.
So I removed. In a boom, you will never see the down arrow. In the crash, you will never see the up arrow. If there are so many arrows, then which arrow you will take? You will be confused, right?
Okay.
So that's why I did not edit the down arrow in the
boom.
In the boom. So otherwise, what you will feel when the trend is down, you will get the down arrows here, right? You will get the down arrows. But in a downtrend, is there any arrow? This is a downtrend. Do you found any arrow from the buyer or from the seller? Why? Because I'm not suggesting don't sell in the boom.
Okay.
That's why I did not mention any down arrows. Because if I mention the down arrows, definitely you will sell, because you say that this is the indicator of LMBO, so I can sell must. I know, right?
Yes.
So that's why there is no for the sell arrow in the boom. I'm not recommending anyone who can sell in the boom. Only find the buy entry and go with the buy. So this movement, one day if you find, your target will be achieved. Tell me, is it a bad movement? Use the moving averages, use the MW pattern, and then identify where you need to enter. It will give you the 2-3 days target. But it is possible some 1 day, 2 day, you will never get the arrow on the boom if the trend is not in your favor. It is possible. So sometime here, I'm showing you.
So when the trend is not in my favor, I use price action to make trade.
Yes,
right?
yes, you can use the price action for the trade, but here, this is what? It is a downtrend, right?
Yes.
You will never get any arrow from the spike catcher, because this spike catcher indicator we filtered that you will never get any against the trend signal. Here, see, this is a downtrend, right? You will never get signal.
Right. So I use price action.
The RSI indicator can be used alongside with the spike catcher.
Yes, because the movements, when it will be confirmed. If you found a W, it is confirmed. Now you are getting the spike catcher, it will work for you. It will move further more, right?
Okay.
Here, it is a downtrend, no arrow, right?
Yes.
It's a downtrend, no arrow. It means this market is not for trading the boom spikes. If you trade here, how you will find the spike? That where it will be happen, because the trend is downtrend. Every time it's moving down, lower low, lower low, lower low. If you enter here and you missed, then how much it is a loss? Too much. So no need. So
Okay, sir. At the beginning, I joined late because of my network. I heard you talk about stochastics. The stochastic, is this supposed to be used in crash or in the boom?
On the all pairs, you can use the
stochastics.
stochast. All pairs.
All pairs.
All pairs. But on the higher time frame, above the H1, H1 or above the H1.
Okay, that's when we can use the stochastics.
Yes, you can use the stochast for the divergence, not for the oversold, overbought area trading.
Overbought.
Only for the divergence. Here, your oversold, overbought area will not work from the indicators. It is not a binary, right?
Okay.
Here, only you are using for the divergence purpose.
I see.
Okay. Only on the 1 minute, when the price, this RSI 20, reach to the oversold area, there is chance for the spike, but I am not recommending that when it oversold, then place an entry, you will get the spike.
Okay.
Because I don't want to give you risk. I give you always that confirm the W pattern, then start the spike trading. Don't use any oversold signal that now it is possible market can move up. This is, I'm not recommending. Only I'm recommending find the W, confirm the W, then start the trading. All the strategies, all the techniques which I'm sharing with you, these are less risky. But market is full with the strategies. On the YouTube, you will find so many strategies on the RSI, on the moving averages. Sometimes you will get the profit when the trend is in your favor. When the trend is against you, it will blow your account. So don't use any of that.
Just put the stochastic for.
One more thing, because I really want to get one or two things very clear.
Okay.
Yes, the RSI and the spike catcher, once we identify the W at the RSI, and then in the chart, and then now we are seeing the spike catcher's arrow, and then we can choose an entry to enter the trade, right?
Yes, you can enter.
Okay.
So this is the first confirmation. Trend is changed. It is a W. RSI give you W. Now a spike catcher will work for you. Right?
Correct. Yes, sir.
Yes, Mithal, what you said?
Yeah, I was talking about putting the stochastic on the chart and show them how long it can go for the oversold and overbought.
Yes.
So they get the idea, because I don't want them to get trapped.
Okay, brother, look at. This is the condition of the stochastic on the 1 minute.
Excuse me, sir.
Yeah, who has got the question?
Now, look at it. Can you read this stochastic?
Wow. W.
Not clear. When it is moving in an oversold area, so many candles move down, it is moving around here, right?
Excuse
So
me,
it is
sir.
not a good way to trade with the stochastic. Because stochastic is not working on the boom and crash on the 1 minute. But H1, why higher time frame, why I show? Because higher time frame is look like a Forex market. It is not look like a spike, right?
Yes.
So now it is showing you clear movements. Now it is showing you clear movements, right?
Yes. Yes.
Now you use for the divergence. Use for the divergence. Okay. So anything clear? Everything is clear, brother?
Yes, sir.
Yes,
so I want
sir.
to add something here.
Yes.
I'm using your spike catcher indicator,
Yes.
and I added my moving averages.
Yes.
Similar to yours,
Yes.
but mine is exponential. So
Yes.
now what I marked here if price is going above moving averages and getting spikes, getting the arrow indicators, it works 100%.
Yes.
So I didn't know about this RSI, how to use it earlier. But what I used to do whenever price is going up direction by cross over the moving averages and getting spike, I always catch those arrows.
I'm going to inform you, this spike catcher indicator algorithms is based when the trend will be confirmed, it is moving in an up direction, then it will start the giving you signal. So if you use the moving average, whatever you will use, because inside the algorithm which we fix, that it when the trend will confirm, then it will give you the signals. So that's why the moving average shown you, it is in an uptrend, then it is starting the signals. Just confirm that this trend is confirmed or not. This will be your plus point, which you don't know before. Right, Harish?
Yes, sir, right.
So sometimes when the little bit trend move up and then it's moved down, it is possible, right?
Yes, sir.
And here always you will fail when there is a 2 or 3 signals come and again price falling down. This area is a risky area for trade and the spike catcher, but now I confirmed and cleared that use when get the W, use in a crash when get the M, then it will work for you, right?
Yes, sir.
Okay, brothers. So for today, this introduction of the indicators and how to use and how to avoid other indicators on the trading, I introduced everything and hope everyone is understood. So for today, it's enough. We will meet tomorrow, inshallah.
All right, sir.
Inshallah. Thank you very much.
Thank you, brothers.
Thank
ATM
you.
machine.
Thank you so much.
All right,
brother.
sir.
ATM machine.
Yes, it's an ATM machine. Purchase the note counting machine.
Automatic teller machine. Yes.
Yes,
ATM.
yes.
All right.
Thank you
brother.
so much. Thank you.